Okay, can we move on, guys?
POV, you're a woman.
True. What have you even done on stream today that's productive? Well, thank God I'm a streamer. So theoretically, anything I do with my stream on is productive. Okay, so fuck you, bitch. Nobody takes a publicly traded company to a private one if their goal wasn't to fundamentally restructure it. Wait, is Elon Musk taking Twitter private? Is that true? Buying it out? What did you think that means? I thought he was just trying to buy like a controlling share. Wait, so if I go to Vanguard, I can't buy Twitter stock anymore? Or what do you mean? Now explain this to me. Oh, because he raised like 43 billion. Oh, holy shit. I wasn't even keeping tabs of the amount. He was trying to buy out literally the entire company. Damn, dude. How many people are sitting on Twitter stock? You must have made so much fucking money. Wait, holy shit. Never mind. Well, how did Twitter stock get so high in value? I remember trading Twitter for fun a few years ago, and it was like 20 bucks a share. Jesus. How did this dog shit platform grow so much? I guess depending on when you entered, you could have theoretically made a decent chunk of change. If you came in at this dip, you like, but. They didn't have any viable monetization model beyond shaping discourse? True.
Those are...
What would making Twitter private mean? If you don't have a, let's see, I don't know. Do I know anything about anything? If you make Twitter private, it means that people can no longer publicly buy shares of the company. And it means that you don't really have like a whole bunch of random investors that you have like a responsibility to run the company a certain way for. So like if you own a company, if you have a private or if you share ownership with a few other people, you can start to make, I think you can make really aggressive decisions with the company that you might not be able to make if it's a publicly traded company. So like if I have like a huge company that's listed on the NASDAQ, it's publicly traded, I have to be careful if I'm the CEO or if I'm somebody that owns a lot of shares. Just because you own a lot of shares doesn't make you the CEO. A CEO could be somebody that doesn't have any, very little control. But if you're like a CEO, you answer to a board of directors, and the board of directors represents all the shareholders. So when I buy stock in company X, there's a guy that sits on a board, okay, a big whiteboard. He sits on there, and him and another group of people that represent major investors or represent a large amount of shareholders basically tell the CEO, like, hey, you need to make sure you're running our company right, or we're gonna fucking fire you, or we're gonna fucking sue you. So you better run your shit right. That's in a publicly traded company. In a privately traded company, that structure might look a lot different. There might be one guy that owns a company, and he might say, you know what? I want this platform to be only N-words, and I'm gonna fucking do it because I have 100% of the company. It's my goddamn company. I'll do what the fuck I want. And he can do that and run it into the ground. Or if it's like one dude and like maybe a few like private investors, you know, like they'll talk to each other about, you know, you're gonna have some accountability to your private investors, like depending on the types of investing they're doing. If your company goes bankrupt, you might have to pay them out before you can take money or anything else, or other debtors, creditors, I guess, get paid back. But yeah, basically private ownership implies no fiduciary responsibility to a whole bunch of like public investors, meaning you can do what you want more aggressively. That would be like my guess, I think, for biggest difference in how you could run a private versus a public company. You can do more aggressive moves because you don't owe shit to anybody. Private investors also sign big-ass contracts as they invest that lay out the rights and responsibilities, which doesn't happen in public markets. Sure, because in public markets, I think it's implied that there's going to be some level of responsibility. Whereas in a private thing, like if I'm going to sign some shit away from you, we're going to write up a contract for what you owe me or like what you could do or can't do or whatever, right? Yeah. Why would someone want to go public then? Is it simply to raise more capital? I think that when you go... Okay, I'm talking shit now. So I've never thought about this before, but I'll take what I know about finance and I'll guess, and then Proteus in chat will tell you if you're right or wrong. The reason why you go public is, let's say that you have a company with a big valuation, and let's say that you're an owner. Let's say that you want to raise money for your company, but you don't want like one or two people to come in and buy out like 50% of your company or some shit, right? You don't want to deal with that shit. But you want to raise more money. You want to open it up to investors. So what you might do is you might take your company and you have something called an IPO, which is an initial public offering. So you value your company and then you're going to sell shares basically you're going to create a whole bunch of shares and say, okay, I'm going to take 40% of the total value. I'm going to take 40% of the ownership of my company. I'm going to put that on public markets. And that way I'm guaranteed to still have majority control, if assuming you own the other 60%, you've got like a group of people to do. But I'm going to let a whole bunch of strangers come in and invest, right? So now you've got the ability, you don't have to go and hunt down 1 or 2 or 3 big investors to try to raise capital for your business. Now everybody has the ability to see your company listed on public exchanges. They can all come in, they can buy and sell your stock because you created that stock as part of your IPO. Now you can raise a ton of money from external people. But there's a new set of like responsibilities that come in for that basically. But yeah, so you don't have to like worry about like 1 or 2 people that you have to beg for money for or raise money from. You can open it up to a huge pool of investors like retailers or whatever. Yeah. Also, all of the early shareholders now have liquidity. Oh, that's another thing too. Let's say that let's say that you're part of an early company and it goes public. When that company goes public, well, no, I'm talking shit now. Because I'm sure that if you have equity in a company, you've probably got some way to get a buyout. Hopefully that's structured in. But if it goes public, you don't need a buyout, right? You can probably just start selling your shares, I would imagine, or something, right? But yeah, sure. So like if I've got a company, the valuation is maybe $100 million and I own like, 5% of it. When that company goes public, I'm pretty sure that ownership that you have is converted into stock or something, I would imagine. And now you can sell that stock on the public market. I think you probably have like a preferred stock or something. I don't know if that's converted, or maybe you just sell it back to the company or something. I'm sure there's some way for them to realize their gains as it goes public or something. I'm sure there's some, I don't know. Usually early shares are restricted. Yeah, it's probably like restricted or preferred stock or something. Restricted from trading for some period of time post IPO so as to not cause a huge rush out on day one, but otherwise, yeah, okay, sure. How much could DGG LLC IPO for, do you think? The number I've heard is it's always 7x revenue. No, that's not always. That's like one thing. I've heard that there's a lot of complicated ways to figure out like the valuation of a company. I don't know what it actually is. That 7x revenue is one I've heard a couple times, but I'm sure that different people have different ways of valuing it.
Oh my gosh.
10x your revenue, your recurring revenue users, is my understanding for econ companies. 10x would be nice, sure. So if I made $1 million and it's revenue, not profit, right? So if I made $1 million a year, the valuation on DGG LLC would be $10 million. So if you bought half of it, I guess you'd be entitled to some profits or something, but. Are there tornadoes in Nebraska? Sure are. What happens to all the stock owned by random people if Musk takes Twitter private? He would buy them all out. That's basically what would happen. That would be my guess. So my guess is if you have like a Fidelity account or a Vanguard account or something, basically if Musk buys out Twitter, they're probably going to send you a letter or something, and then you're going to get a sum of money in your escrow or your fund account or whatever the fuck the money account is that holds your money. You'll just get like a lump sum of cash because Musk will forcibly buy your shares, right? Yeah, generally, when people buy, what if you refuse to sell? You don't have the right to refuse to sell. But the compensation for that is, I think it's almost always the case. It must be. If somebody is buying at a company, there's usually a premium that they're paying per share. So if you have like a $30 or $40 a share, holdings in Twitter, if somebody else is forcibly buying you out, it's probably they're going to be giving you like $45, $50 a share. It's going to be good for you generally. If you're holding stock and somebody buys your company out, you're probably getting paid pretty well for it. There would be no profits. Destiny would take a huge salary. If I were to IPO my company, the thing is that if I sold 100% of it, I wouldn't be able to decide what my salary is. My salary would be determined by a board of directors. So if I sold all of the shares of my company, I had no equity, and other people were making decisions, then they would decide what my salary should be. You also probably wouldn't sell 100%? No, I'd probably not. I'd probably keep 51 or something, right? Or I'd keep 60 so I could sell off smaller bits too. Oh my god. Can Can you make your company public, sell all of your shit, and then retire? That's a good question. No. So what usually happens, I'm talking a lot of shit because I only know of like 3 buyouts in my life, so maybe not always, but usually what happens is when companies are made public or when one company buys another, usually an agreement is left in place to make it so that the execs that are working at that company are forced to stay on board and work for 1 to 5 years after acquisition. So like if I were to sell 100% of my shit and other people were to come in and buy it or whatever, or if a company were to, or major, like usually there'd be like some agreements like, okay, listen, like you're selling all your shit, but like if you're gonna IPO or you're gonna do this, there's gonna be some agreement like you have to work for at least 3 years after you're selling your shit. Because yeah, that's why sometimes you can take this bit of finance knowledge now that I've given you. Oftentimes you'll see like when a company is bought 3 years later, everybody's like, oh my God, all these execs are leaving. Like, oh my God, the company's getting fucked. Like, oh, look, you can see all the execs. The reason why people usually leave afterwards is because they were only on for 3 years afterwards. People, they sold their stock, whatever, but there's an agreement in place like, hey, you need to stay for a transitionary period, post-acquisition, you're going to be here for 1 to 3 years. But after those years drop off, you see like an exodus because like, okay, yeah, I want to leave, I'm done, right? But people will see shit like that and they'll soy out over it. And you're like, oh, this is how you know the company's fucked or whatever, yeah.
Welcome to Kansas.
If you IPO DGG LLC and nobody wanted to buy shares, do you just have to eat shit and get fucked? I don't know how that happens. If you IPO and it's like way less than you thought, I'm not sure. I don't know what, could you like take it back? Like my valuation, I'd probably go like $1 billion, and then you IPO and the stock price fucking tanks, and now all of a sudden you've lost 40% of your company and you only made like $2 million on it. You can cancel your IPO? No shot. There's got to be some restriction on that. Like if the price drops too much, you can just say like, never mind, take note. Like, no way. Or you have to like buy them out or something, right?
Let her know we're okay, but they need to take cover.
Your share value is determined by the bank's underwriting your IPO. Oh, does a bank guarantee a price then? Is there like a loan kind of you can take out based on it, or some investment from the bank, or? Or maybe all of your initial shares, the ones that aren't part of the float, but the initial offered stock, what am I thinking of? Maybe those are all like actually marked at a certain price and you can't, like, it's not like people can buy them for cheaper. Maybe? Oh, wait. Yeah, I'm a fucking moron. Of course they would be marketed at a certain price. They're held by the company. The company would just refuse to sell. If I were to issue stock from my company would issue the stock at like $20 a share. We'd have a price and we just won't go lower. I'm thinking of normally markets are incredibly liquid and prices will move or fluctuate. But if you're selling the initial stock, you wouldn't fluctuate. You just have it like, if you can't buy it at this price, fuck you. Yeah, of course. Yeah, it's an offer.
Straight east towards Augusta.
How can companies like Amazon constantly split and create new shares? I think that the reason why you do stock splits is because you want to increase the liquidity of your outstanding shares, or all of your stock really, and you want to give people more access to being able to buy or sell it. I don't know how much that actually helps, I guess, but like let's say that you have your stock is like $500 a share, right? Like how many people are going to buy a stock for $500? That's really scary. But you can do like a stock split, and now you have twice as much stock for $250 a share, right? Okay, more people can get in and buy your stock basically. And then you've got people like stock splits are usually to devalue shares that others have. I don't think that's true, because your stock would double, right? If you had 10 shares and they did a split, you'd have 20 shares. Some companies, like I think Berkshire Hathaway, never split their stock. So if you wanted is it a Class A share that it's called? If you wanted like a main share of Berkshire Hathaway, I think it's like $10,000 to buy a share of the stock. Or I might be over exaggerating. Oh, holy shit! Wait, I was way under exaggerating. I'm sorry. It trades at $484,000 a share. Class B are $322 each. But I think Warren Buffett literally said, like, I think the quote was, I don't want retarded dipshit fucks buying and selling my stock like Pokemon trading cards, so I'm never splitting my stock. I think that was the quote. Can you buy partial shares? I don't think so. Theoretically, if you invest in a fund, you're kind of buying a partial share. Like, let's say I make a DGG fund that has $500,000 of capital, and I've got 10 people that have bought in, and that fund only owns one share of Berkshire Hathaway. In a way, you kind of own 1/10 of a share, because 10 of you have all bought into my one fund, and my one fund owns one share. I guess. Partial shares, not parcel shares. Interactive brokers support partial share. Okay, I don't know what a partial share. I don't know how those are underwritten. I don't know what that means. Maybe you can. I don't know anything about it. I can buy it through Fidelity. But in that case, is this like, do you actually own a partial share, or does your brokerage just own a share, and then for like a small fee it like kind of rents that share out to multiple people? Does that make sense? Like, is the brokerage the owner of the share, and you just kind of like are almost on like
Have you been following Microsoft/Activision merger?
No.
Their shareholders had a vote to approve the deal. Would that be required for Twitter?
I don't know. Fractional shares almost sounds like trading on margin. Like, hey, I want to own 1/10 of this share. Like, okay, there you go. Now you own it, so you're entitled to like 1/10 of the profits. And well, no, not really, I guess, because margin. If you're trading on margin, that amplifies your gains and losses. Fractional would probably be proportional, so nothing would be amplified, I guess. Yeah. I don't think there's any fee. I'm not sure. There must be like a tiny fee attached, no? Otherwise, why would you offer the service? Why the fuck would I want people to be able to buy 1/10 of a fucking share if I'm not charging a small fee for it or something, no? There's going to be a vote to approve the Twitter sell. I mean, they're going to approve it. If you're offering a huge premium on the current price, then you almost have to, right? I would imagine. Unless there's some exotic... I didn't read enough about like the poison pill shit or whatever, but... Did you ever take the plunge and buy Facebook stock? No, but I feel like I should have. Did Facebook ever recover? I just didn't have the liquidity. I didn't have any like cash. Oh no, they haven't recovered yet. Okay, that's still a good buy, baby. That's a premium stock right there. It's going to the moon. I'm glad you reminded me. Today I might do it. Maybe. The issue was with Robinhood. They were able to offer a share at a price. If it dips, they could buy it up before, since they are intermediate. Destiny, I bought it when you said, and it was at 189. I've made a good amount on it. Well, good job. What's your opinion on the metaverse? I don't know how to. I'm so glad I'm not like a super online person, even though I am a super online person. I don't know how to explain this to you, but there is stuff that happens in real life that you just don't get in a fucking computer game. Like, I'm trying to imagine, because I feel like people fantasize about this. I don't want to say the saddest things, just about like, let's say that you have your metaverse glasses on, and then your like long distance girlfriend has her metaverse glasses on. And you're both like in bed together looking at each other. It's like, oh, this is cool. We're like in the metaverse, but not really, because I can't touch you. I can't touch the person. It's way different. It doesn't feel good. But who knows? How much for a share of Destiny stock? Good one. Could I take my company public? If I could make $500,000 or $1 million in revenue, I could sell my whole company for $5 to $10 million, work for 3 years, and then retire. Who wants to buy my stock? That would be based. Get me the fuck out of here. Hell yeah. I'd be the first streamer to IPO his own brand, right? And then the board can fire me, or I'll quit in 3 years. And then who gets hired? Who are you going to find to run the Destiny GG LLC? Any advice for somebody who wants to start a political YouTube channel / video comment? I don't know, bro. That's good luck. That's a fucked space. Would you retire if Hassan acquired you and told you to stop streaming? Oof, that would be insane.